Well, hello, and welcome back. It's been a while to record new videos. So, today I want to discuss, can I pick 10 stocks and still win? Okay, now let's create a system for that. But before we go any further, I want to say that again, I'm not a financial advisor, so whatever I'm saying, take it with a grain of salt, because this is the way I trade, and that's not the only system that I'm going to be trading. So, believe it or not, it's exactly what I'm trading, similar kind of system, but do your own due diligence. Don't just follow exactly what I'm doing, okay? Now, here's the idea what I came up with. How about we'll create the system where it's NASDAQ 100 universe of stocks. We will only do one simple thing, how to rank our basically stocks, and then we will not use any other indication, we will not any fancy screening basically, and we will just rotate every single week on those stocks. Okay, so we'll try to hold basically 10 stocks at any given moment, but we'll see how to rotate it, which stocks to get in, which stocks to get out. Okay, so is it possible to win? The rationale for this is NASDAQ 100 is they're all high-flying stocks. They're not something that you that's like very slowly moving. These are typically big stocks, known names, very technology-driven. So like right now, AI obviously. So they're very technology-driven stocks. What we will use the momentum, and that's the reason why you're actually gonna win. So yes, you will be able to win, and I will, at the end, so stick around, I will use another way to get into the stock. So it's a different type of measurement of momentum, but you will see. But the most important part, it's all about the exits, just to give you an idea. Now, the system rules, very simple. NASDAQ 100 universe of stocks. We'll get into 10 positions at 10% allocation each. That's it. That's very simple. Now, what we will do, which stocks we'll get into, right? And NASDAQ 100, it's 100 stocks at any given moment. So which stock do we get into? Well, we'll get into the stocks, which in this case will be the highest rate of change. Meaning that in the last, actually I didn't even write it, but in the last 1 year, the stocks which made the most money, that's the stock we'll pick. So in reality, we will not use any fancy schmancy indication, just whichever the stocks made the most money from those 100 stocks in the last 1 year, that's the stock that we'll pick. Okay, 10 stocks like this. So naturally, it will basically rotate in and out from stocks as they change from year to year, from month to month, even from week to week maybe. But we'll see shortly. So now, we don't just want to get in on any stock. I want to get in if that stock decided to show me that, oh, there is a strength in that stock. So that we will try to use the unstop order, 1% from the previous closing price. So that way, if it hits it, means that it was going in the right direction, it was going up. So I'm going to get in like that. And how do I get out? Well, I get out if I trail 20% behind, or I will just rotate each week based on the ranking mechanism I just said. So whatever the stock is made the most in the last 1 year, as a sliding window, think of it this way, that's the one that we will pick. Or we'll leave it alone if it's still the part of the same first 10 stocks that we're saying that they made the most money, right? So the most important part is we still want to protect ourselves if the market is trying to go down. So in order to do that, I have a market regime sometimes. People call it, well, we call it a market filter. Some people call it market regime. So what it means is that both S&P 500 and NASDAQ 100, both of them have to be above their own 200-day moving average, simple moving average. So this way we know that that's not the bear market territory. Since it's not the bear market territory, it's safe to try to open new positions. Otherwise, we just, as I said, trailing with the 20% behind, or we'll rotate in and out, but only we'll rotate in if it's not a bear market. Otherwise, we'll leave it alone and only we'll trail behind with 20%. So, here's what it looks like as a system. 18% compounded annual growth rate, CAGR, returns. you can see clearly that the red line, that's my, not S&P 500, that's my high-flying NASDAQ 100. We are clearly outperforming it on the long run. On top of it, you can see that my drawdowns are smaller than the actual S&P, the NASDAQ 100 can generate. So it's a pretty interesting system. It doesn't mean it will outperform all the time, but you can see that when it's established bull market like this, it really starts outperforming. That angle is faster than this angle. Here as well, angle is faster. Like right now, when this in this choppy motion, so it's still not established bull market. Doesn't matter what people say. The system tells me the whole story that once it's an established bull market, it works like a charm. If it's not an established bull market, it's not gonna work that like a charm. It's still kind of going sideways a little bit here, right? In 2024, it started to be not as established anymore, so it's going to be going sideways. But overall, that system is a winning system. See, it stays with that trade on average for 36 days. Okay, here's to show you again quickly what it looks like on a yearly. And this column, the comparison column, defines if we're outperforming or underperforming the index. And this is on monthly. And this includes the last week. I don't have the data yet for Monday, so that's why it doesn't include it. It's probably rallied on Monday right here. If I would have recorded only 3 hours from now, that would have been a different story. That's my data provider would have updated the data, including the today's date, the Monday. But this is including only Friday. So last week was not great, and obviously it was down on Friday. Now, what if I'll use what if? Right? I just wanted to show you that that system is very robust. What if I use very not common way to measure that momentum? Okay, so here I was using the highest rate of change, right, to get in. Now we'll use the RSI, but not just the typical RSI. Typically people use 14 days RSI. For like Larry O'Connor's measurement, the short-term mean reversion style, they use 3 days RSI. Okay, great. I will use 200 days RSI. I want to use something which is on a longer term. The reason why I want to do longer term is I want to know which stock on a longer term made more money. Okay, so because that way I know that overall, over time, I'm going to win that way. That's the trick. It's all about the exits, not the entries. So here's what that system looks like if I use the RSI of 200 days. You can still see that it performs slightly worse in terms of the returns, but as far as the drawdowns are concerned, it's better. And as far as the winning, so you can see that it's almost repeating what the NASDAQ 100 does, but unlike the NASDAQ 100, it just doesn't go as far as the NASDAQ 100 does, right? So in this from that perspective, it's better. It doesn't mean that it's going to outperform all the time. You can see again, some years it outperforms, some years it underperforms by quite a lot too. Let's say like 2023, you can see that it was underperforming a lot. But in 2008, it outperformed a lot. In 2022, it outperformed significantly, 11%. In 2020, it outperformed very significantly. Right. So there's some years where it outperforms. And once again, this one shows you only, not including the Monday, today, the November 24th. But still, you can see that it's a pretty robust system. Right. All I did, I just changed the ranking. Nothing else was touched in this particular case. So, conclusion. Can we make money? Remember how we started? Can we make money and win with 10 stocks at a time? Yes, you can. Is it really, by the way, that easy to use just that system? I would say no. That is why I don't trade that system all by itself. I have personally 67 systems total with all kinds of different objectives and ideas. So don't just take this system and say, okay, I'm going to trade this particular system. If you do take this system, go smaller. Don't go high, don't go big. So I would suggest to use other systems in this particular case, and that's how you can actually win. But can it outperform in the long run? Absolutely it can. This is one of the systems which will outperform the market in the long run. Do you need really sophisticated screening? Because people can come up with all kinds of entry rules. As you can see here, we only had one rule for entry, and that's it. So you really don't need to have a huge selection of screening to get in. especially something like NASDAQ 100. It really is working like a charm sometimes. And simple rules means reliable results. Okay? Doesn't mean that you will outperform all the time. And I will have separate videos again on the psychology where I'm talking a little bit more in terms of the expectations versus reality. And that's a different story. But if you have any questions, write to info@tradingsystems.com. You can also check out our website, tradingsystems.com. And we have 4 books right now on Amazon, 3 by Lawrence, 1 by me. And take note of these books, and you can buy it. And if you go and buy these books and read it, at the end there is a free offer, 1 from Lawrence and 1 from me, actually, to get into the free course. So you can get the free course. So be my guest, be our guest. To get this free course, register. You can actually register right on our website for the free course, and hopefully you will like it. But otherwise, I'll see you next time. Bye.